Hey guys, welcome back to another video on Luke and Papa Investing. I'm Luke.
And I'm Shiraz, also known as Papa. Welcome back, guys. Thanks for tuning in.
Yeah, so today we're going to be doing another deep dive on a specific stock. Our portfolio has been bouncing around lately, but we're going to do a separate video on that.
Yeah, so this is going to be the one, like we did last time on New York Times on a specific stock. And this one's kind of interesting, isn't it?
Yeah, so this stock is actually the most profitable company in all of the S&P 500.
I wonder if our audience would be able to guess it right now. What do you think they're thinking?
Yeah, I'm sure a lot of you are like, oh, they're doing Visa. Wow, Visa, such a cool company.
We're not
But
doing Visa. No. What are we doing?
we're doing CME.
CME. What the heck is that?
Yeah, so the Chicago Mercantile Exchange.
Yeah. Who knows what they do? So maybe I'll start. They're a futures exchange. Do you want to try to explain what the heck that is?
CME does a lot of future contracts, and what a future contract is, for example, take a wheat farmer. A wheat farmer has a harvest in, let's say, 6 months, and the wheat prices are good now, like they'll be able to feed their family or whatnot with the wheat prices right now, and they want to be able to ensure that the wheat price doesn't just drop when the harvest is ready. So what a future contract does is they go on something like CME and they find a speculator who's willing to make a future contract saying that they'll buy X amount of wheat for this price in 6 months' time.
Exactly. So, yeah, they want to lock in some pricing, is how it started with agricultural products. And it could be a speculator, it could be like Nabisco that needs to buy the wheat.
Yeah.
And I think the thing that's different about an exchange is instead of doing it kind of one off, what they call bilaterally, this is all done in a big marketplace, right?
Yeah, so essentially what CME does is they act as the middleman.
Yeah.
So it's kind of like CME is buying the wheat from the farmer and selling it to the buyer. And in that way, they eliminate a lot of risk because if you're just like a wheat farmer and you go up to some like Nabisco and you're like, hey, can you buy my wheat in this much time? Like, well, how do they know that you're going to produce the wheat? And how do you know that they're going to pay you on time? So CME really like establishes a lot of trust and eliminates a lot of the risk, which is a big part of their business is just risk management.
Exactly. And we're talking about and explaining this concept of futures because this is how it started with agricultural products, but it has blown up to all kinds of different things, right?
Yeah, so I mean, first of all, I gave the example for agricultural, but futures like you can do futures for anything now, and
Yeah.
especially with CME, they started off being known as a future market for like primarily agricultural products, like farmers needing to lock in a price for their harvest. However, now there's like six main groups. Do you want to tell us what those groups are?
Yeah, for sure. So you have agriculture, as you said. You have energy. The classic one could be, oil. If you think about, an airline company want to lock in their fuel prices is a good example.
Yeah.
You also have interest rates where you can make bets on the future, what the interest rate will be in the future. You have equity indices, the stock market indexes, FX or foreign exchange, and then metals. You can go take a bet on the price of gold or the price of silver.
Yeah. And again, all these are risk management focused. I mean, yeah, sure, you can go, do you think the price of gold is going to like skyrocket or something? You could buy futures for gold. But a lot of it too is like foreign exchange. Like say you have a offshore business and you don't want to have to worry about the risk of the euro price going up or down. So you just want to lock in a future for that price, and then you can like worry about your business and everything else.
Yeah, exactly. Let's talk a little bit about the history. So these were really old businesses, right, Luke?
Yeah, so they were originally founded in 1898, and like I said, they were originally known for selling agricultural futures, and they were known for having a direct competitor, CBOT. And in 2007, they acquired CBOT and they merged to make the CME Group.
Yeah, and these were not, electronic exchanges, right? These were actually
Yeah.
places in Chicago
Yeah.
where guys in jackets actually traded stuff.
Yeah, people on the floor making trades. So that's how it started off, is actually on a trading floor, unlike just on your computer like we do today. But
And CBOT, I think, was the big like competitor, the rival. They bought them in 2007,
Yep.
and then I think they bought NYMEX
Yeah.
in maybe the next year, 2008. So this has kind of been three big businesses that have come together to form the CME Group today.
Yeah.
What's their primary business model?
So their primary business model is they make money off of traffic through the CME exchange. They don't make money based on, the market's like way up, they're not making more money. They make the most money when they have a lot of traffic through their exchange. And what this means is basically they take a fee for every transaction, around like 60 cents per every future contract, and they have like millions and millions of users and contracts going through the exchange, and they just take a portion of every one of those contracts every day.
Yeah, perfect. So, by the way, if you have actually bought a future yourself, we know we've got some sophisticated investors listening. Leave us a comment. Help us explain it. Hopefully, we did justice to how this works. But Luke and I have actually never bought a futures contract ourselves. But
Yeah.
before we move on, should we just touch on some key facts? Maybe do you want to anything we haven't touched on yet, Luke?
Yeah, I mean, I do just want to explain too that there's something called the networking model,
Yeah.
which is super crucial to CME's business. So what this means is CME, like say they have traders who trust CME and they trade a bunch on the platform, then that causes there to be more future contracts to open up,
Yeah.
and this is called liquidity. So essentially, if there's more options for different types of futures, like you could just bet on the stock market or anything,
Yeah.
then that like draws in more traders, and then it's just like an amplifying effect. And this is really good for them because the more futures that are being traded on their platform, the more money they make.
Yeah, everybody wants to be where everybody's trading, because if there's a marketplace where there's nobody, no participants there, there's nobody going to be on the other side of any trade. So, yeah, and this actually has a big impact in terms of the value they can bring their clients. They talk about these sort of margin efficiencies, this concept of if a trader comes in, they have to put up collateral.
Yeah.
And if you have a big marketplace that can trade a lot of different things, you can be more efficient with that collateral or that margin.
Yeah.
Maybe just a couple facts on some numbers before we do our kind of typical analysis. You want to just touch on revenue and operating income?
Yeah, so in 2024, they made $6.1 billion in revenue, which is pretty good. But the more amazing part is that their operating income is $4.2 billion, which is like over a 68% margin.
Yeah, it's like the most profitable company. If we think about that, of that 6.1, they pay for all their tech fees, all their salaries, and still left over is this $4+ billion. It's just a lot of money that they could do a lot of things with.
Yeah.
All right, their market cap today is about 100 billion. Their PE is 28. And one interesting thing about this is the company pays a dividend, right?
Yeah, and this dividend is special. We'll go over it later, but they pay a normal dividend. Like if you look it up, it's like around 1.4%. But they also pay a special dividend, so we had to include that in our total calculation at the end.
Yeah, and this is actually the first time we've come across this. If anybody's got experience with special dividend, like help us understand. It looks like they're paying it out once a year, but it's not really a kind of declared dividend, so it's a little bit unusual.
Yeah.
We're going to touch a little bit on growth before we go into our usual analysis. So do you want to just touch on the growth when we look at kind of full year results and then Q1 results?
Yeah, so full year in revenue, they're growing 10%, and their operating income is growing 14%. So, their margins are increasing, which is super good.
Yeah, and you guys will have to remember these numbers when we do our forecasting of EPS growth, but it's double digit. It's good, and Q1 looked pretty good as well, right, Luke?
Yeah, and also, Q1 was another 10% growth for revenue, 15% growth for operating income, 11% growth for EPS, and like you said, this is a $100 billion market cap company. It's not a small company, And to see growth like this is really impressive in such a big company.
Yeah, a super old company, and it's growing at double digits.
Yeah.
So before we do our typical analysis, should we do our fun facts?
Yeah, sure.
You want to go first?
Yeah, so my fun fact is I'm sure many of you watching have seen Ferris Bueller's Day Off, and we'll play a clip, but there's actually a clip of him going to the Chicago Mercantile Exchange, and on the floor there's all of the traders, like asking for their trades, and I thought it was just a cool fun fact that the old company we're talking about was in the Ferris Bueller's Day Off. So what's your fun fact, Papa?
My fun facts, I think it's not that fun, but it's kind of interesting. They're working with Google and signed a joint venture to help, like Google's helping them get into the cloud and use AI tools. And Google, as part of that, invested $1 billion in 2021.
Jeez.
So I thought that was interesting.
I mean, also, like, cybersecurity is a big part because, it's one of the biggest future exchanges, and so they really need to make sure that their exchange is secure.
Yeah, and I don't know how to say this politically, but like the management team of CME is kind of old finance guys. They're not really like technology coders. So I thought it was good and interesting that they're working with a company like Google on all things tech.
Should we jump into our classic analysis?
Yeah, let's do it. Why don't we remind folks there are 2 key questions we ask, and we've been using better investing tools to help us with this analysis. So what's the first question we ask?
So the first question we ask is this a high quality growth company?
Yep. How do we assess that?
So we look at the historical sales and the historical earnings per share, and this analysis is strictly based off numbers. We just look at the growth, and we look to see if it was a consistent rate of growth, that looking for that line of best fit.
Yeah. Here's sales. What do you think of this chart?
Yeah, so like I said, consistent growth, it's really close to the line of best fit, 6.5% growth, 10.4% growth from the last quarter. I think it's growing really well.
Yeah, it's super consistent. I mean, we've been looking at a lot of these charts, and it's pretty hard to find one that, over more than 5 years grows this consistently. So we then switch over and look at earnings per share. What do you think of this EPS chart?
Yeah, I mean, even better, growth of 7% of all time, 11% since the last quarter. It's just growing at a steady rate. And mind you, it's not like they're just making, and mind you, they're making a lot of money. Yeah. It's like they're growing steadily while being the most profitable company in the S&P 500. So this is really impressive.
Yeah, I agree. So do you think we can declare they're good on our first question?
Yeah, sales and EPS look really, really good. So
yeah,
what's the next question?
Next question, is it the right price? So we try to not move forward if it's not a high quality growth stock. If it is a high quality growth stock, we don't want to buy it at any price. Like Palantir is trading at almost like 100x sales. We are not in that business.
Yeah.
So this question is all about valuation. Is it the right price? And how do we assess this, Luke?
So how we do this is we forecast our earnings and sales growth. We do this by looking at the company's last 5 years growth for sales, and there's also actual analysts who put their estimates, and we want to say we think ours is a little bit higher than theirs.
Yeah, this is pretty unusual where we try to be conservative, but in this case, it's exactly what Luke said, that for whatever reason, the analysts covering this stock are forecasting 3% growth in EPS. But if you recall, we were talking about the kind of overview and the numbers, we're seeing double-digit growth consistently, and they have a lot of growth initiatives. We didn't talk about all their crypto work and their work with, but we're going to maybe touch on that a little bit later. So yeah, anyway, we're projecting 8.5% EPS growth here, which doesn't feel crazy, but it is ahead of what the analysts are saying.
Yeah, I mean, we're just trying to find a sweet spot. I mean, the last 5 years were 12.7%. We don't know if they can keep growing at that rate, but we certainly think they can grow more than 3%.
Yeah, so once we have our EPS forecasted and we have a high EPS based on this and we have a more conservative one of 11.21, what do we do next?
So next, we're going to predict a high PE, And how we do this is we look at the last 5-year average for the high PE, and we multiply that by our high EPS forecast, and we get 463, which, it's a bit insane, but
And what are we doing on the low side?
same thing. We're just
Yeah.
using the last 5-year average for the low PE
Yeah.
and multiplying it by our low EPS estimate, and we get our forecasted low stock price.
Yeah, perfect. And this might look familiar to you. We then have kind of our buy, hold, and sell range. And again, the low price that we forecasted and the high price that we forecasted are at the top and bottom of this bar chart. And I think this looks pretty good, right, Luke?
Yeah, again, we're always trying to aim for greater than that 3-to-1 ratio, and you see here it's 4.4-to-1, which is good. It's in the green.
Yeah.
I mean, we'll acknowledge it's close to the yellow. It's a lot closer than our other stocks, but it's still in the buy range, and we're pretty confident.
Yeah, and actually, Barbara had asked us whether this analysis takes into consideration dividends. Our overall analysis does, but this specific forecast actually doesn't ignore dividends. So it's in the buy range without thinking about that 4-ish% potential yield on dividends. And when you think about adding that in, it actually increases our target, annual price appreciation. Think about like an IRR number from about 10.8%. You can add in another 3.5, and it gets us closer to 14.2%.
I mean, yeah, like the dividends are important because they have a lot of cash. They pay a lot back to shareholders. So if you reinvest those dividends and add that to the analyzed appreciation, we're making more money. And so I think it's good to include that.
Yeah, so it looks good on this analysis. We've always now tried to just touch on some of the real opportunities that are perhaps a little more qualitative, and then some of the risks before we make our final decision. Should we just touch on some of the opportunities that we haven't maybe fully discussed yet?
Yeah, so like I said earlier, CME, they make their money off of traffic to the exchange.
Yeah.
And so if there's like more people on the exchange, they'll make more money.
Yeah.
And when you're thinking about what's going to cause more people to be trading futures, well, volatility in the stock market is actually really good for future trading exchanges like this, because if the market is completely flat, people aren't going to put as many varying futures for different prices compared to if it's super volatile.
100%. If you're worried about tariffs or wars or all kinds of uncertainty, then you want to manage your risk more, and you want to consider taking more of these type of hedges or positions to protect yourself a little bit more.
Yeah, exactly.
What other ones can we think about as kind of opportunities?
There's crypto, I think, is a really interesting one.
Yeah.
Everyone's just hearing a bunch about crypto. How can we apply futures to crypto?
Yeah, I actually don't know exactly how it works, but they've created a whole new set of products that I think is just similar to their stock market indices, where you can bet on the price of crypto in the future, going up or going down, and it's just a way to do it as a more simple futures contract than actually worrying about like losing your codes and all that kind of stuff.
Yeah,
So,
and this also, part of this is their risk management, because crypto miners, they might want to hedge against their revenue by making future contracts with the price. But like you said, there's also a lot of speculators who are just trying to make money with the futures.
Yeah.
And I think that's also a really good opportunity, because we said it's a lot of risk management. Like, they're just trying to get people who want to hedge against their revenue. But how could there be a new opportunity with these speculators who are just trying to beat the market?
Yeah, I mean, it's like just giving them all kinds of different new products, So I think they're trying to, they just hooked up with Robinhood to make it even easier for retail investors, smaller investors, to buy smaller chunks. So, I think if you're a speculator, to answer your question, and you have a point of view on the price of oil, you could go buy like an oil company, but that's not a direct thing. What CME allows you to do is make a direct bet on the insight that you might have. You might have a conviction on the price of oil, the price of gold, or something like that.
Yeah, and if you open Schwab or E-Trade, you'll see their whole futures, like how you buy futures through the brokerages, is with CME, and that's a way for like private investors, singular investors to get into the future market,
And that's a huge initiative they talk about on all their earnings call. The other one they talk about is international growth, like just going into new countries, new geographies. All right, how about on the risk side, Luke? What should we talk about?
So there are some competitive risks. I mean, it's important to acknowledge, yes, they're a legacy company. They've been around, for a while. They're super trusted. So it is unlikely that some new company comes and just completely crushes them. However, you did say they aren't very tech savvy. It's a bunch
Yeah.
of, traders. Like they had to partner with Google, but
Yeah, Coinbase could become a much better crypto,
Yeah.
futures marketplace. There are a lot of tech savvy companies that could compete directly with them.
yeah, and there's also competing exchanges like LMX and ICE.
ICE, yeah. Yeah. I think the other one that might be worth mentioning is a little bit of the regulatory side. Do you want to say a word about how that might play here?
Yeah, I mean, you said that the recent growth, a lot of it is due to international markets.
Yeah.
And the CEO himself said that he's super worried about China and the
Yeah.
Middle East because the Chinese government could easily just say, hey, like, if you want to buy futures, do it at these Chinese exchanges. And there are already Chinese exchanges, and they could just easily shut down all of the China market for CME.
Yeah, or Europe could just say, "Hey, you cannot charge that much. We are going to pass a law and say any, futures, player has to charge this much." And so
Yeah.
they're very regulated, which I think is a moat or a differentiation, but it could also turn against them, especially if there's some like big global, trade wars going on.
Yeah, exactly.
And yeah, I think we also talked a little bit about kind of the cyber. Obviously their technology could melt down. It looks like they're pretty solid.
I mean, yeah, they have so much volume every day. If something bad were to happen, that could cause a lot of backlash for them. If they
Yeah.
computers didn't work for one day, it could be really bad.
Hopefully, we've given you a little bit of a balanced view of some of the positives and some of the risks. Definitely leave us a note. Let us know what you think, and if this part of the discussion is useful to you. But I think we're probably ready to bring it to a wrap. What do you think?
Yeah, I mean, I think it's a super cool company. What are you thinking?
Yeah, I think we should buy it. We've got $469 in our account. What do you think? Should we just put in an order?
Yeah, I mean, it is trading at over $200. So we do talk about dollar cost averaging, like especially with the volatile markets today. We don't just want to buy everything at one time because it could crash.
Yeah.
It's hard to dollar cost average when we're only buying a few shares of it.
Yeah.
But
we could buy half our money now and half our money in a week or two or something like that.
Yeah, let's buy one share now.
One share now.
Another share in a couple weeks. That sounds good to me.
We need more money. We need some more money. All right. Well, I think that's a wrap for us. Thanks so much for watching. Leave us a note and share it with a friend if you like it.
Yeah. Thank you so much. Oh, shit.
Are we okay?
Oh, my God.
What happened?
I was so scared.
Why?
Oh, my God. I love Apple. It auto-fucking selected this microphone.
Oh.
I didn't select it, so I thought I would have gotten fucked. But it's on.
Yeah, parce que c'est bien ce qu'on a fait.